Metrofile, of course, is the company that does the document management, records management. They do paper-based storage and also the whole business of electronic capturing and so on and so forth. Smaller company, as I said, 2.01 billion rands worth of market cap. Price to earnings ratio 15.05, dividend yield of 4.88. Nice steady little company. We always talk about its past, which is part of that MGX group. Then it basically just about blew up all the other stuff, and then Micromega just climbed its way out of an enormous hole and has done a tremendous job over the years. A real market leader.
Graham Wackrell really led that revival of the business and focused on their core competencies, which is record management and also digital record management. Benefited to some extent from regulations where companies were required to keep records for 5 years. And have had good growth off the back of that. More recently have been expanding into sub-Saharan Africa, mainly Southern Africa, and also a little bit into the Middle East. I guess they, to some extent, have saturated the South African market, are the market leader. Really the growth is going to be driven by sort of the economy, which is obviously not that great at the moment, so they need to look offshore for further growth.
It sort of ties though back to our earlier conversations about Oracle and Salesforce though, because what is happening in a lot of like the document management space is that people are integrating file uploads, retention and replacement into their core CRM system. So as you open a new account record, like at the bank, you might see that they're using systems and then they're capturing the documents, your ID and all of that. So the idea of like a specialist off-site protector of your data, I mean, it's getting a bit more competitive there. Are you as confident that they can be a strong player, a scale player, when these other options start to become apparent?
Yeah, so I guess the sort of the document management solutions that are provided, it could be some competition, but I think in terms of paper off-site record management, it's still required. And is something that they're particularly good at.
That's a good point. In other words, to open an account on a JSE member firm, you have to have a signed original mandate that has to get paid.
So medium term, if there is a change to, I guess, the legislation and the behavior that things move completely digital, they do digital record management, but it could take a little bit of a bite out of their core traditional business.
But there's still going to be a lot of work to be done in an economy like this that goes in transition. Okay, anything else to add? Let's have a look at the share chart. So it's been a little bit of a slack sideways performer. What's that about? Was it more like the recovery phase early on and maybe people have sort of lost interest? Why is it going sideways?
I think through that recovery phase it had very good earnings growth, got subsequently a very high rating, and now looked at the earnings, most recent earnings up 12.5% on HEPS. So I guess, relative to 15p, that's reasonably fair. Good cash generator, but I think maybe some of the concerns about the medium-term sustainability of the business are starting to drag on the share price.
So hot or not?
Given the South African economy, the rating, I'm not going to be hot right now. I'd like to see what they do with their offshore expansion.
It's interesting because as we've discussed it over the years, we've kind of been positive on the aftermath, and now the rating has sort of turned.
Caught up.
So we'll go with not hot on that one.